Traders, welcome back to my channel. A few things before we get started today. If you guys could let me know below if you have an issue seeing what I'm doing, like on TradingView. I know a lot of you are probably watching from mobile, so I want to know like everything looks clear and stuff like that. If not, I'll find a way to fix it. I did have someone mention that it looked a little blurry, so I'm not seeing it on my end, but definitely want to fix that if it is the case. So just let me know and I will try to go through and see how to make things more clear. And okay, so today's video, you already know if you read the title. It's a strategy I use on UJ. Specifically, I use it on UJ, but you can technically use this strategy on any high volatility pair, meaning like UJ, GJ, gold is one as well, although gold does tend to range a little bit, so you'd have to be careful there. You do want a pair, though, that tends to give us really strong trends like we see with UJ, okay? So you want to see nice, strong trends, not a lot of this sort of thing, which is what we call a ranging period. So we don't want to see a lot of periods like this. Another pair that will do this a lot is the US Canadian dollar and the US Swiss franc. You'll see ranging periods a lot with those two as well. So you wouldn't want to do it on a pair like those. Before I even get into the actual strategy, I do kind of want to give a disclaimer. You do need to have a basic understanding of market structure. So if you saw my post on Instagram today, I did mention that. And what I mean by that, you guys, is you need to be able to know how to find a trend. You want to know your candlestick analysis really well as well, because you want to know how to spot rejection, right? So those are things, if you're not comfortable with, try and get comfortable with them before you take on a strategy like this one. And of course, risk management. So when starting this strategy, use really low lots, you guys. If you're testing a new strategy, it's always great to start on demo. But if you're not starting on demo, use really low lots and always calculate your risk, okay? So basically, without rambling on anymore, just always want to drive home the risk management portion, because I hate teaching you guys something and then, having you utilize it the wrong way, or, chance blowing your account, stuff like that. What you want to do when you're trialing this strategy, or when you're doing the strategy, you want to find a nice trend, okay? So you want to trade with the trend. And you want to be on a larger time frame, by the way. Sorry, I should have mentioned that to begin. So it's going to be daily or higher, okay? You can start off on the weekly and determine your trend. So right now, we have been trending up, okay, the last several weeks. However, we're at a turning point here, okay? As we can see, we had major rejection off of this resistance, which I'm just going to quickly draw in. And if we go back, you could see that this has been resistance. You could draw a zone in here as well. I normally do use zones even with this strategy. But basically what we're seeing, you guys, is rejection here of this area, right? And now we're starting to trend down. So next thing I would do, once I see where I'm trending, so it's kind of a bad, not a bad example, but I mean, this example, we are opposing the trend, okay? Normally what I would like to do is get in with the trend on a pullback. So for instance, let's say like here, we're trending up, right? And we're really strongly trending up. I'd try to get in like here and ride with the trend. Because in this case, we're taking a counter trend. Although if we do look, and this is what I mean by understanding structure, if we do look, we actually do have a trend line here. So I'm kind of lying to you a little bit. And this is imperfect. I'm just showing you the basic. So we did have a trend line forming there. It's not a super strong one, but we could say that we are still following the long-term trend. And again, this is the weekly. So I like to start spotting entries on the daily. So let's go down to the daily. And what we want to do is find an entry point. So we're going to take a sell, right? And again, now that I'm kind of zoning out and looking at this, we can definitely consider this a downtrend, guys. So that's fine. Forget what I was saying. Although, I mean, I would consider this quite a strong uptrend. we can still look at, and this is why you really do need to have that strong understanding of market structure, because you need to be able to say, okay, we were trending up here, but looking at the bigger picture, we were trending down, right? And this has not broken structure, meaning we haven't come up out of this trend line and broken it. So it's respecting this trend line very, very well. Okay, so getting back to it, you'd want to enter here at rejection. Okay, so just like you would on any trade. So if you go to any of my zone to zone strategies, if you take my free course, you guys know I look for a rejection wick followed by confirmation. So that's how I spot my entry. Now here's where this strategy gets really interesting. So basically all this is allowing you to trail your stops and enter a long-term trade. Okay. So I want to find an example of where this works really well, because I don't think it's going to actually work where I have it, but let's just say we enter. So we got rejection here and we enter a sell, I don't know, like here, okay? So this is our stop loss. Let's make it red just so that's easy to see. And this isn't always gonna work, you guys. It just trailing stops tend to work really well on pairs like this because your candles do get so long, okay? You get so much movement. Next thing you're going to do is you're going to let the candle ride out. Now you're going to have to place a stop, a normal stop to begin with. So you probably place it above this wick high. Okay. That's how we normally place a stop here on my channel. Next thing you're going to do, so you're going to ride to the next day and move your stop to the previous candle. Now, in this case, it did not quite work out. Okay. So we would have gotten stopped out here, which you probably would have taken a small loss. But let's say you got back in, okay? So you entered again because you stuck with your analysis, you're happy with it. So you got back in there, place your stop above this wick high, okay? So you're gonna ride to the next day. So this is the next day here. And I'm gonna zoom in because I wanna make sure you guys can really see this. Let me know if this is better. I'm trying to zoom in and so you guys can see everything. All right. So we go down to the next day, which would be, oh shoot, did I say it was this guy? I get kind of lost in my candles here. Yeah, so we're coming down to this guy now. So what you're going to do is, and let's delete that, you're going to trail your stop loss, okay? So your stop loss was originally placed above this high, okay? So next thing you're going to do is trail your stop to the wick high of this candle. Now, I know this is going to be a little bit different because this wick ended up coming up a lot higher. So it might even be a little bit higher than your original stop. That's fine. You're going to keep riding down. Okay. We're going to go to the next day. And okay, no, the next day would be here. And we're going to move that stop loss again. So basically what you're doing, guys, is the day, let me use arrows here because I'm getting lost in these candles. The day that we're on, okay, so once we move into that day, or once the candle switches over, so if you're awake and you're watching it switch over to this candle, okay, we're going to move your stop, so trail your stop to the wick high, not the body high, the wick high of the previous candle, okay? And eventually you are going to get stopped out, and you should get stopped out into profit, okay? Same thing, so let's move on. We're going to go to this candle. I hate these guys. No. He's not going to, okay. So next we're going to go to this guy. I'm going to mark it again, even though it's going to be pretty obvious this time. So we're moving to this candle. Again, we're going to trail our stop loss, okay? And eventually what's going to happen, we didn't quite get stopped out here, but we definitely would get stopped out at this one because this candle ends up coming up quite high. And now you have all of this movement in profit, okay? Just moving your stop. So it does usually last a few days. And in this case, we got back in, right? Like we did get stopped out, likely due to news or something like that. It's okay to get back in as long as, and I had to have a whole video on this, as long as you're sticking with your plan, market structure hasn't changed, and you're not over leveraging, which goes back to your plan. So it's fine to get back in a trade. Sometimes my stops are too tight, I'll be honest. I think actually, if I had to kind of give you my biggest weakness as a trader, it definitely would be that my stops are a little tight. And obviously we're all working to be better, right? Every one of us is working to be a better trader. So But it's what my point is, I trust my analysis. So sometimes if my stop, I determine that it's too tight, I get back in as long as it fits my plan. Whoops. And I haven't over leveraged. Okay. Okay. So that's that. Let's just see. I was going to give you a rough idea of how many pips we would have made, but I'm trying to see now where our entry would have been. I think it was around here. And yeah. Okay. So, and then you can count your pips out. Now this isn't actually 32 pips because these are actually points. So it's a lot more than that. But usually this is a pretty good movement on a yen pair. Okay. And because it's the daily time frame, it looks like it's not that big of a movement, but it really is. If we went out to the weekly, it would be good. Let's do one more example. I don't want to go on too long, but I want you guys to really understand this. And I should have clarified, you guys know that red line was our stop loss. I don't think I need to even really clarify that. Let's do it on, I was going to say this one, but I want to do it on one that I would actually take. So let's do it on this one. So here, same thing. We get a area, okay, of rejection. And again, we are trending down, which I know I said we weren't at first, but looking at market structure, we are, so that's fine. So we're trending down and we enter, let me make this guy black to show our entry because I got a little, when I'm showing you guys this way, I get a little confused because I get lost on the darn candles. But we see rejection here, okay? That's a nice, beautiful rejection candle. And this is on the daily. This is where I spot these entries on the daily, okay, for this strategy. Spot them on the daily. I'm actually riding a trade right now that I just entered yesterday. So I'm trying the strategy, even though I was a little late to the party, but I'll let you guys know how that turned out. So we spot rejection here and we're going to enter, I would say around here, because we'd be on the lower time frame to confirm our entry. I'm not going to show it because I'd have to go all the way back. But basically what you do is go down to the 4-hour chart and make sure you get some nice long-bodied candles. Maybe let's even say here, okay? So this will be our entry point because we want some confirmation that it is moving down on the lower time frames. If you don't understand confirmation, I have a bunch of videos on it. I'm not going to get into it now because it'll be too long. So we enter here and our stop loss, we're going to place a few pips above the wick. And let me move that up a bit because it's too tight. And what we're going to do is, okay, so we go to the next candle, which is going to be, let me use an arrow this time because that little ellipse is hard to use. We go down to this candle, and once this candle closes, so once the first candle closes, we're going to move our stop loss, okay? So we're going to move our stop loss so we can delete this, to the previous candle high, which would be here, okay? Because this is the previous candle now. Same thing, once we move on to this candle, so once this candle closes, we're going to move our stop loss to the wick high, not the body high. I want to be really clear about that. And this is going to be a pretty short trade. It lasts a couple days because once we go here and we move our stop loss here, we're going to get stopped out right in this area, which is still, you guys, a beautiful trade, okay? So we went from all the way around there. I should have kept that in. And this is a huge movement because, again, this isn't actually 230 pips, right? We move the 0 over and it becomes 2,000 versus the 200 area. So you guys, this is, a really solid strategy. Does it always work? Absolutely not. No strategy always works, okay? But if it doesn't work, remember the example here where, we ended up getting stopped out a bit early. Don't be afraid to get back in if you're confident in your analysis. That's something that I don't mind stressing to you guys. And that doesn't mean you want a revenge trade and hop right back in right away. Look at your trade again. Make sure you haven't broken structure and you're still confident in your analysis, but this can be a really great trade. Let me know in the comments if you could see everything well, if I zoomed in enough this time, and also if you like the strategy, if you're going to use it. So I will have this posted for you shortly, and I'll see you guys in the next video.